CPI data tonight. Goldman Sachs is looking at US inflation has hit its peak. What do you think? Now, honestly itself, I don't think so, and I have reason for that. But of course, if you're telling me that today what will be the number, well, I think it will be a lower number, but I don't think it has peaked. And let me explain to you more in detail very shortly. Now, disclaimer apply as usual, my friends. I'm here to tell you what I believe, and of course, at the end of the day, you have to do your own risk management. All right, thank you, AIMS, for all the kind support and sponsor. Now, the thing is this. We know that tonight, the CPI data will be announced, and the market is looking at a consensus of 8.1%. Now, the previous number was 8.5, and to have 8.1 is not something that we don't expect, because the US crude oil energy prices have came down quite a fair bit, more than 5%, to be precise, about 6%. So on average itself, right, every 5-6% of the energy prices plus minus, as you said yesterday, it'll be about 0.3% of the CPI data. So for the data to come out to be 8.1 to even 8 is very highly possible. But if you look carefully at the whole thing right now, you can see that since 2021, the CPI data has burst past the average 3 since 2018, and of course it went all the way up to this point of 9.1% back in June. Okay, but the point is this: what causes this inflation? It is because of the easy money policy. So now we have the US Federal Reserve trying to increase interest rate to bring this down. The question is how to bring it back down to the expected 2% level. I can't find unless that you had to increase interest rate all the way up to 4.5 to even 5%. So this is something to concern, because as you can see that even though there is some form of peaking, but anytime this number can go back up again. And the thing is this: in UK, there are already some analysts are looking at as much as 12 to even 18% inflation. So if UK is going to have that itself, I cannot see why US won't be able to cross the 10%. Now the thing is this, but of course Goldman Sachs, the analyst came in and says that he's the chief Asia Pacific equity strategist. He says that the US likely tonight the CPI data will be at 8%. So it's even better than 8.1. And of course, if the number is better than 8.1, the consensus, definitely the stock market will go up again. But the thing is this, it's still at 8%. So it is still considered high. So in fact itself, right, there's another guy from, his name is Yellen. Yellen actually wrote, and he came in on Bloomberg, and he says that, right, this is like the chance of Jerome Powell maintaining the stand, but he also thinks that the inflation has peaked. In fact itself, he wrote in his article, I think this is the one, this guy, okay, the US economic indicators, the Citigroup's economic surprise index, okay. Now apparently, in this latest research, right, it's a monthly thing, I believe, all right. It says that the Citigroup Economic Surprise Index has moved up. Now, when this index is moving upwards, that means that the data shows that the market is doing better than expected. Hence, it's a surprise. It's a positive surprise. So you can see that when times are pretty bad, the index will go down, right? You can see over here. And when things are good, it will shoot up. So you can see that's the reason why the stock market went all the way up, recovering from the the low end. But if you look at it collectively, it's actually more towards a downtrend, right? Don't you think so? So the thing is this, I kind of feel that, right, although the index is moving up recently, but it's still on the downward trend. And once the inflation start to come back in again, this will likely be moving downwards. And this is my view here. But of course, for the people who are into the long side, they'll prefer to believe that this is on the way up itself. All right. So of course, everybody is to their own, but I got my reason to say that. But just let you know that even though Yadini research did say that the surprise index is going up, but he doesn't see the 2% inflation number that everybody looking at to be coming in soon. And I think I roughly know why. Now, the thing is that the Federal Reserve is likely going to still hike 75 basis points regardless whatever the data come out tonight, okay? And based on the consensus by the analysts, okay, they are expecting to be 75 basis points. In fact, itself, right, it's going to still, what's the main target is to really bring down the inflation to the 2% mark, which of course is kind of tough. Now, the thing is, this survey came from a strong majority of economists, of 72 of them, and 44 of them predicted that the central bank will likely hike it by 75 basis points. But you must understand that just a month ago, there was only 20% of them. So you can see that that's how the analysts actually work. They may not be the best person to tell you stuff because they can get it very, very wrong. And there's still people, about 39% is still looking at the 50 basis point. Oh my goodness, I cannot see how can it be. So the point is this, that I want to explain here itself, is that if the inflation is still stay at 8% level, and what will happen is that if the interest rate keep on going up, what will usually happen is that the US jobless rate will also be going up soon. Now, I already warned everybody since July that the only way for once this interest rate goes up, right, the people will get jobless, as I said before, because you need to tone down the entire economic activity. So that's the reason why I felt that this number will go higher. Easily, it should be going to about 4.2% to even 5% by 2023. And that's the reason why recession will come in. So you can see now it's really happening. When you have interest rate going upwards, you will usually see jobless rate going upward at the same time. And the thing is this is really possible, and that's why the word recession is going to be nearby, okay? All right, of course, still people say that it won't, but I just kind of can see how would that be, all right? So we just look at this right now. The reason recently why the US market is going up, because the US dollar has pulled back. Now, I already mentioned to you guys back was about 110. I said that do take some profit on the US dollar because this is how it works. Every time when the US dollar get pumped up itself, when the media comes in and tell you that the US dollar is going to go higher, it's almost inevitable it will go down. Okay, but if you notice that every time when it comes down and once it hit the support level, it will usually go up again and it will go to a new high. So now what I see from the chart is very clear. I see a support right here at 108 level, and I believe that very soon it will be going up again. And this time round is 112 as my target. So what causes the US dollar to come down recently? Of course, the ECB. Now, the ECB have high interest rates, and Canada have high interest rate. So obviously, when they hike this interest rate itself, right, that will bring up and push down the US dollar. Okay, this is really, really pretty simple. But once US Federal Reserve increase the interest rate again, the US dollar will be bumped up again. So I felt that this is a great time to buy some US dollar. I repeat, this is a great time to buy some US dollars because I strongly believe that the US dollar is going to go up. All right, so look out for this. And of course, if you look at the RSI itself, right, every time when the market hit RSI 50, it's a very strong indication of a rebound sign coming in. So that's the reason why I felt that the market is very close to a rebound very soon on the US dollar. And what will happen if the US dollar goes up? Well, you will see something here to double confirm, right? Now you can see that the US 10-year yield, although it's not moving any higher, but because the US dollar is down, right, we're supposed to see the US yield coming down, but we don't see that. So I suspect that this is going to pump it higher. So which means that if the US dollar will find strength again, the US 10-year yield will still climb, and then when it start to climb again, the stock market will be affected, because this is the reason why the stock market have been coming down. Because since since early this year, which is like 2022, the yield itself was 1.4% back then, remember? And now it went all the way up to now 3.4%, and that's what happened to the stock market. The stock market came off. So we should be looking at this, and the 10-year yields tell us that the US dollar most likely is going to go up again. Now, something to note here, everybody. Moment, please. Hold on. Let me just. All right. The interesting part is that last night, even though the stock market went up, right, I realized that the put-call ratio also went up. This is something unique because usually when the stock market is coming off, right, the put-call ratio pulls back. But yesterday, I see there's some buying coming in, and this is not a good sign. And if that's the case itself, right, there is a form of protection right now against the downside. And I believe that the boys are preparing for that. So be very careful on the stock market. You may be surprised at what may happen later on. Okay, now, The thing is that I'm getting very concerned is the US crude oil. Why do I think that the inflation itself hasn't peaked yet? Because first of all, you can see from the crude oil momentum, the crude oil momentum is very nice. It's a very nice downward trend. So obviously it's alright. The US crude oil, if you look at it from this point here to here, okay, that will be the entire August period. Okay, so the today's data is alright, will be based on the August data. Okay, and you can see that the crude oil generally is going down. So this is good, but the thing is this, okay, I suspect that very soon there will be an artificial support coming in, and this will be a very good buy for crude oil. So at $77 to $78, I think this will be a very good price for traders to watch out for crude. And the last time when we saw something like this, okay, when it hit the support level and the RSI actually came down, that was back in December last year, and I suspect that this will happen in October. Yes, indeed. I suspect that this thing will happen in October, and I have said before to you guys, if the crude oil price do come back down, usually the stock market will also be coming down. And if you compare and contrast, you will notice that over the last period of time when the crude oil was coming downwards, right, the stock market also came off, all right? So this is something to watch out for. Now, why do I think that the crude oil later will be shooting up? Okay, there is a few reasons. Let me explain this to you right now. Now, first of all, okay, moment. Alright, first of all, it's alright, we can see that Yellen yesterday came in and tell everybody regarding about how she feel about the crude oil market. And she actually tell everyone that there could be a spike in the crude oil prices in winter period. Now, this is all covered in Reuters, Energy World, CNN. Alright, so what is the reason for her to say this? Well, the thing is that because we compare what happened in the US crude oil seasonal pattern, we do see October market going up, right? But after that, right, usually you will see that the crude oil coming down. So the seasonal pattern doesn't really equate to what we are seeing right now. All right, or what is she expecting? But of course, on the same notation itself, right, we supposed to see a upthrust movement in the crude oil prices in September, which we didn't see that. In fact, it came off instead. So why do I think that Yellen will be right? Because I think it's got to do with the current situation now with this. Okay, let me show to you right now. Right, Yellen says that, right, there could be could experience a spike in the gas prices in winter, and the reason was because of the European Union says that they may cut back on the buying of the Russian oil, and of course we are seeing that the Russian oil will be a problem. But I think there's more to meet the eye, because if you remember that the US President Joe Biden came in to say that he will release 1 million barrel of the SPR crude oil per day over 6 months, and the best part of this is that he says that it will end by October. So it actually, don't you realize that all these thing itself is really, you know, there's some what they call significant here itself. Why all say October? Because if the SPR contribution stops, then naturally the crude oil prices will be going up again because they need to replenish the reserve. That is very, very important. But there's something on the side that's really, really something to watch out for, is this. OPEC and allies has decided to cut output in October. Oh my God. Again, October. And this is really no kidding. So they, instead of really cutting, improving the supply of the crude oil, they actually stunned the market by saying that there will be a production cut instead. So don't you realize that right now, right, there could be a chance that the October, November, December crude oil price could go up instead. And if that really, really happened, then I can tell you that inflation will go through the roof. And that's why I don't think that the CPI data has peaked in a way. It will be like coming off a bit, but later on it should be going up again. And if all these things really happen, then of course the inflation numbers will move or motivates the US Federal Reserve to keep on hiking interest rate. All right. And I have said this before, watch out for Bitcoin. As long as Bitcoin is moving upwards, okay, that means that the so-called traders are still on a positive note, the stock market will go up. But if, let's say, if I'm correct, and I suspect that the US dollar will be going up again, and I suspect that the US Federal Reserve will still continue with 75 basis point, and they will still be very hawkish, and plus, if crude oil price do actually bottom out by about $77, then this Bitcoin will be coming down. Because once Bitcoin comes down, then it's very clear the S&P 500 will be coming down too. So the best thing is this: the Bitcoin itself is 24 hours market, it's very active. So as long as you watch the Bitcoin very closely, you will likely know what to do with the US equity market. All right, so this is one way that that I believe that the CPI data will be lower today, but it hasn't picked yet. In fact itself, I believe that there'll be another upthrust again. Okay, so that will be the fundamental side. Let's look at the technical side, shall we? Now, the technical side today, we have a very, very strong upthrust movement from the China A50. So you can see that it broke the very important moving average today, and now it's going up. So once I said before to you, once the market breaks above the MA30, it will be going higher, and that is what I'm seeing right now. And of course, that propelled the Hong Kong market, Hang Seng, to be trading upwards. But the upside itself is kind of what they call not that much as compared to the China A50 upside. Now, the thing is this, I want to warn you guys, is that the KSI of mine and my KRW is all red right now. So which means that this upthrust could be just temporary. But we all know that there's a BNB previously, hence therefore 19458 is the BNB one-time one, and the market has triggered it. So once the market is done there itself, I expect resistance to be here at 19561 on the MA30, and after that itself, right, there could be a pullback in the short term. All right. Now, for the US Dow Jones itself, I have done the computation for you. All right, now I'm taking the all-time high and I do the 5% reduction method. The midway point, please write down, is 32,335. Okay, I'll write it down for you guys. All right, that should be 32,335. Okay. So which means that as long as the Dow Jones stays above 32,335, we can still see potential upside back to here again. And that is at 33,258. But once the Dow Jones go below 32,335, I am quite confident to say that it will come back down to 31,411. All right, so there is about 900 points drop if, let's say, the market loses 32,335. Now, of course, if the market really loses the 31,411, then there is a very good chance the market will come down to this point here, and that's a midway point, and that's 30,488. Now, that means that, right, if the market loses 31,411, there will be a 1,000 point drop all the way down to 30488. All right, now you can see over here, it's a very strong cluster here. Whenever the market goes there itself, right, I mean, it's almost like every time when the market breaks 411, the chance of it going down to here itself is pretty high, and that's a very good trade for all traders to watch out for. And the RSI at the moment now is near the 50 zone, and that usually means that there could be a chance of a pullback. So I strongly believe that there could be a pullback once the market loses 32,335. All right, and of course, you can see over here itself for the Dow Jones, the KSI of mine is still red. So I suspect that this upside itself is going to be limited. And today at the moment now is an Omega, which means an opening price and the high is the same. Okay, that means there's actually some selling pressure. And last but not least itself, right, this is the H4 chart. Now I've been using this chart quite a fair bit, and you can see that the market is following the H4 chart very beautifully. And every time when it hits the high, you can see that the RSI would be at the 77 zone, and we are here right now, but the market is way lower than the last one. So which means that it just need to do this on the side. Okay, once the market actually breaks this trend line, we should see some selling. Okay, we should see some selling. And I think that traders need to be just very cautious. And of course, this level that it breaks itself will somewhere be about 32,300 level, which is what I just mentioned to you, the 33,335 level. That means about the same area. And if the market breaks here itself, there could be some serious selling. All right. So with all this itself, right, just take note again. I believe that crude oil price will be pulled back because my KSI is still red in color, but the buying interest is coming in. So once we have a good pullback to about $77, I believe that traders should be watching it very closely. And of course, my KFC on the gold has been done. That was back on the 6th of September, and of course the level to watch out for will be somewhere around here, and that is at 1726 level. Okay, 1726. So which means that as long as the market gold stays below 1726, gold should be going downwards. Okay, but the buying interest is coming in, so watch out for 1726. That's a KFC level. If the market breaks above KFC level at 1726, we can see 1758 again. But as long as market stays below 1726, then the downside is still going to be going down to 1680 level. All right, so hopefully today will be a good day for all of you guys. This is Cal signing off. Have a great day. Bye bye.